of no return in the market. This is where we've either got to go up or we're going to go down. The market itself overall has been very bullish. So if we zoom out, and we'll start with the SPX since we're here, this is the big boy. If we go to the monthly on the SPX, look at that. I mean, nothing about that really says we're coming down. I mean, we're at all-time highs. So when you hit all-time highs, you do get pullbacks. We got a pullback here, but this was with the tariffs. We got a pullback over here. This was COVID. And so you see these spots in the market where the market pulled back, something happened. So we want to remember that. Most of the times when we're seeing these pullbacks, this is COVID, this is the tariffs. So the next pullback, what will be the trigger that makes us have a pullback? Because for the most part, we've been running since, man, we got a small pullback in 2022, and we've been going up ever since. So even if you bought this dip here at 35.77, man, you'd be up nicely just buying the SPX. The SPX or the SPY, same thing. So you would be up. I mean, there's no way you would not make money. So now we're at all-time highs. Let's think about this, the United States economy, but we also have to remember that the economy and the stock market are not the same thing. The economy and the stock market are two totally different things. So we're looking at record numbers of people out of work. We're looking at artificial intelligence taking people's jobs. We're looking at all of these things, mergers, buy-ins, buyouts, buybacks on stocks. So this is where our stock psychology has to come into play and say, well, what is Wall Street thinking? What is Wall Street doing? Will we continue to go up? And so when we start thinking like that and looking like that, we just want to look for the opportunities that are in front of us at the moment. And when we start doing that, we'll see success. And as we can see now, SPX, we're pushing down. So I think we'll be, by the end, I said 80, 68, 66. With this candle looking like this now, and it just turned red. Let me see. I'm going to go to not the hollows. I don't have volume candles. I'm going to go to regular candles instead of hollows. But this looks very bearish to me now. I would think, let's see. So my first charting, I would say here, because this was the support of the last biggest green candle when we wicked off on Friday. This was, what's that, 15, 354, almost at close. So I would say we come there. And if we break there, I say we come to, this, I can't even see that no more. 60, 68, 66. Okay, so let's keep an eye, 68, 66. And this is very important, what's going on with the SPY. So we want to see where the SPY is going to end up at tonight, because if we come in tomorrow and we're at 68.60, that's very bearish, because think about it. Look at this drop that can happen from 68.58 all the way down. All we have is this wick at 68.47. We lose that, and man, we've got a nice drop setting up on the SPX. I mean, it doesn't really get any nicer than this. Now, this is the 18, but you can clearly see a off-shape M pattern forming here. You know, McDonald's is open, and we would expect it to come on down and close us out. So we have that forming. We could get down to, man, if we get that drop, that would be nice. 68.26 is support. So if they're going to sell off before the Fed speak, I would expect us on the SPX to come back to 68.27, possibly 68.05. Those would be the levels I would look for the SPX to come to. And from where we are now, let me see. I mean, it's just 70 points. That's $7. So, but that's still $7 on the SPX is really, really good. So keep your eye out for that. If we break, mark it on your, take a note of wherever, put it on your calendar. But if we break 68.47, you could probably sit comfortably in puts because there's nothing here to stop it. There's nothing over there that would stop that move down. So that would be an easy play down. I mean, you'll get some bumps down to 68.42, boom, 68.55, boom, and then straight down 68.27. We lose that, and you get that drop straight down. So pretty easy move, pretty easy move. And if we get that, that'll be nice. Let's take one more look at where we are before we get into Netflix. See, did we? Yeah, see, it's trying to recover, and looks like it wicked. Wait a minute, it did the wick just since I was looking to 68.60, 68.68. So I said we might get to 68.66, and look what they did. They wicked us all the way down just since we've opened to 68.68. So we almost literally, and that's why I say when we're charting this and I'm saying it's going somewhere, normally it's going to go there, but if it goes there, it doesn't mean it's going to stay there. Okay, so let's be clear about that. So if you're trading something and it gets there and it's not continuing to break down, go ahead and take your profit, get out of Dodge, unless you're buying into something like we're about to talk about with Netflix, unless you're buying into something for the next 5 to 10 years, you know, don't hang around. Don't hang around. Like if you were just trading this in futures, we could have took a call in futures on the SPX mini or the ES. And then literally when that candle turned, boom, you could have rode that all the way down, sold here, went back up with a call, and then down with a put, and now ride it down. Not a put, but literally futures. So that's kind of how you can trade this. And Josh is here. He might be trading it right now. I just saw him come in. But anyway, we're going to move on. Just a quick little snippet on the market opening. And right now, it just seems like indecision. We went up, came down, and now we're just kind of hanging out in the middle. But to me, I think they might sell us off before the Fed, the way that this is looking, the way this is setting up in the middle, and the way that we wicked out of that. They took a lot of money tonight from some people. So glad it wasn't us. From both sides. They got the people at the top, and then the people that thought they were going down, they got them too. So let me see. There was one thing that I wanted to share tonight too before we get too deep. I want to talk about, well, let's do Netflix, and then we'll come. I'm going to show you how to do a limit order because Netflix is about to have a nice move down, and you want to be able to get that long term, and you don't have to even be home. I'm going to show you how to set a limit order. And some of you already know this, but I'm going to show you how to set your limit order, and you'll be good to go if you're home or if you're not. So let's take a look at Netflix. All right, Netflix. Okay, let's go to the 18-minute. So I didn't even look at the chart on this at all on Friday. But this was Friday. So the market opened at 9:30 in the morning, and they tried to sell it off. It came back up, and we went all the way back up to 104 on Netflix. And then look, we got a gravestone doji. Anytime you see these candles that are wicking really, really hard from the top, this is called a gravestone doji. You might not remember the name, but when you see that little skinny red candle with the body that's so small that you can't even see it, it's a gravestone doji. You can Google it and look it up. And then you got to top these two topping candles, get out of Dodge, close your contracts, or just take a put or short it. So you literally could have traded this on Friday from 1024, literally from 1024 all the way down until 1342. So over to about 1 o'clock. Nice drop on Netflix. And we came all the way down. Well, let's look at where we bottomed at. We bottomed at 97. And so Where do we see this going overall? How can we invest in this? So now we Tuesday we gap down. Friday we dropped. Now we're playing kind of in the middle. And the news with Netflix is they bought Warner Brothers. They bought like HBO. Let me see. The news is probably right here. Yeah, Netflix has agreed to acquire Warner Brothers, potentially impacting its content strategy and offerings. So this is going to be good long term, but for right now, the reason it dropped is because they've spent a lot of their capital on this investment, and then some of the investors weren't too happy about that, because now if an emergency or something arises, they don't have the capital sitting on the side to potentially deal with what is going on. So let's see their financials real quick. Let's see how much money Netflix has. Looks good to me. So let's go back. 2024, 9 billion, 9 billion, 9. Looks like they've been stuck in 9, 10, 11.1, 11.6. So their income has gone up. And if you look at their balance sheet, man, this balance sheet looks pretty good. Shoot. This balance sheet looks like, shoot, let me see. Total revenue, 11.6 billion, 11.1, 11.3, 10. I mean, this is really the way you want to see a balance sheet look. They went from 8.8 billion to 8.5, 8.8, 9.3. 9. I mean, this is the way you want to see it. Look at these increases. 12%, 14%, 16%, 14%, 15%, 19%. And then look at their cost of goods, the gross profit. This is where you want to invest. This looks really, really good. You're not seeing any red. You're not seeing any numbers that jump out saying no. Operating income. This is year over year. Up 18%, 3.3 billion. The EBITDA. Yeah, everything looks good. And so if you think about the move that they just made, and let me see, they don't have a dividend. Man, I wish they had a dividend. So now the question is, how does this affect them moving forward? Their forward guidance, and I think it's going to take the stock up. I think it's going to take the stock up. And if you look by United States, Europe, Latin America, Asia Pacific, Canada, we come over to 2024. Look how America has gone up from 13 billion. 16 billion. Look at Europe, from 10 billion, 12 billion. Look at that jump. Man, people are wearing Netflix out. Latin America, 4.4. Then look at Latin America, 4.8. None of those numbers are lower. Asia, 3.7. 4. Good Lord. In Asia, they are wearing Netflix out. Canada, 1.1 up to 1.2. So all of these numbers look really, really good, even by country. So why would it turn around? So that's the next thing you have to ask yourself. If I'm getting ready to make an investment into Netflix, what's my entry? And so that's what we want to talk about tonight. So I took a look at it. I had a gentleman reach out to me the other day, and I didn't get a chance to chart it until later. But if you look at this, we've got tremendous value to the upside, back up to 134, but we're currently below all of the EMAs on the daily, which is very, very bearish. Anytime you get below the 200 and the 200 and the 20, we just got a death cross. Let me show y'all that right here. That happened on November the 23rd, Tuesday, November the 25th, excuse me. Somewhere in there. Let me see. Let me zoom in so we can be exact. The death cross happened. Anyway, it was either 24th, 25th, right there. They crossed, and look at the 20. The 20 is pointing down like it's blocking. You know, you're not coming up. There's resistance there. The 200 straight level is like you're jumping up and you're hitting the roof. This is telling me that this is going to go down. Even the 50, the 100, all pointing down. So I think Netflix is going to go down for a while. And look, when you zoom it out, see how we have that cupping action going? That's giving you resistance from the top of the stock. So if I zoom out and look at this on the monthly, the larger time frame, so we can see where we could potentially go.
Hey, Anthony,
Yes.
we can only see SPX.
Oh, okay. Okay. I'm glad you said that, man. Y'all, please let me know. I have two charts. Let me switch it. Oh man, I'm doing all that talking and y'all can't see it. Okay. I need to take that other chart off. Man, please help me out, guys. I'm talking for like 15 minutes about Netflix. Y'all must be watching the game too. Okay, so here it is, Netflix. So this is what I was talking about. So let me go back now and do what I just did again because I showed it on the daily. So if you look at Netflix on the daily, this green line, this is the 20. And you have the 20-day moving average, and the blue line is the 200-day. They just got a death cross on the 25th of November, and you see how the lines are pointing down. I just talked about that, but all the EMAs are pointing down, and then the rule of thumb is when you break the 200, you trade it down. So we broke the 200 on November the 20th. We got a nice drop, some support at 104.36. We came back up, and the 20-day moving average was too much for us. Can y'all see that? We came down, we got a triple bottom, boom, we tried to come back up. We couldn't get above the 20. The 20 created resistance, and then we got a wick, and then look, boom, we gapped down. We gapped down. And so now we're pushing straight down. Look at, think of this candle as a shooting star. It's coming straight down. So now the question is, the $1 million question is, where is it going? And so if we look at this candle and look objectively, we'll stay on the daily for a minute. Let me see if I can do the daily on the 3 months. No, we'll go back to the 6 months. Might make it a little bit easier. Yeah. Let's do that. Yeah. So we're looking at the bottoms. We're looking at the bottoms. See right here, this was a W pattern. So let me mark that out. So this is how I find my long-term investments. I'm looking at this W. Last time we got here, we got 3 touches. We're normally looking for 3 touches before we go up. 1, 2, 3. This was June or January 25th, boom, March, and then the lows of April's, and we bounced and took off. We bounced and took off. So now, knowing that we're coming back, I would like to see this before I buy personally. I mean, you could do what you want, but the way that this is looking and the way that we're moving and we're trending down, I would like to buy this at $74, $85, somewhere in that area, because we're expecting a pullback in the new year or sooner. It could start as early as the Fed's meeting on Thursday, on Wednesday, excuse me. So if we get a sell-off at the Fed's meeting, we could get this way lower, way lower. So don't go buy tomorrow. But if you're looking to invest in this long term, let me take the EMAs off. I want it to be nice and clean and clear. This will change your generationally. The way that this candle is setting up, Fed meeting doesn't go well. We could be just in a couple of days right here. 91.80 would be my first level. And then if we come to 91.80, we lose, where's this candle at? Let me mark it right here. The top of this candle right here is what we're contending with. We lose that candle, that would bring us to 91.45. We lose 91.45, and we will get the rest of this candle down, which would bring us to 85.80. And we lose 85.80, then you're in my buy zone, our house. So that would put me in the area where I feel comfortable buying for the next few years. 82, maybe grab like, well, I'll tell you what, we might not get there. My first buy zone would be 91. I might say, hey, 10 shares. Here, 50 to 100. That's just me, not you. And then down here, we get to 74. I'm talking like 200-300 shares because I'm going to hold them. This is not something, this is something to pass on to the kids. This is something that I could sell in 2040, 2050, 2045, should I still be around. So it's not something I'm going to jump in and jump out of. And so this comes into having those portfolios that we've been talking about, your long-term, your swing trades, your leaps, your crypto, and then your day trading. Everybody should have those 5 accounts by now, hopefully. No pressure to get there, but get there as soon as you can. And I'll put those in the chat also, or someone can put those there. But the way that this is setting up, we're in a downtrend. We had our highs at 134.12. We had a higher low, 126.80. We had a lower low at 124.09, and then boom, we gapped down, came back up, tried to retest the highs, a clear W pattern. We got to 116.31, couldn't handle it there, zeroed out at 103, tried to come back and retest this area, didn't work. Now we're breaking down, coming up on the week of the Fed decision. So what I want to show you now, let me see how to set your limit order. Let me see if I can switch screens. I want to show everybody, if you have an account, I use Thinkorswim, I have Webull, I have several, but let me see if I can show you on this one. And I covered all the values and everything, so we'd be good to go. Okay, where's that account at? So what you want to do, you want to go into your account, and let's say you're at work. Here we go, Thinkorswim. Let's say you're at work, or you're getting ready to go to work, and you got to be at work, and you got to be at work at 6 o'clock. You can get up at 5 o'clock in the morning, and you say, man, the Fed's going to be speaking. I want to get, your first order might be, let's say 25 shares. So all you got to do is do 25 shares. Then right here, you want to make sure it says limit. So you come to limit, and then you're going to change that price to, what did we just say on the chart? $82. So now you're sitting there at $82. And then, so when you hit buy, it'll ask you to review it. It'll tell you how much it is, $2,050. And then you just hit send. And that's it. And the order got rejected because the market is not open. So, but that's all you have to do, and your order will be sitting in the queue. Even if you're at work, you don't miss those lows. You can get into your play, and you don't even have to worry about it. Now, the other thing, if we're doing options, let me show you that little trick too. So let's say that you're doing an option on Netflix, and you want to trade Netflix down. Can y'all see the screen? I want to make sure I'm on the screen. Can y'all see the Thinkorswim screen?
You're good.
Okay, good. I want to make sure I'm not doing all this talking. Y'all can't see it. Okay, so now you go to options. Let's say we know it's coming down. We don't know when. So let's go to January 16th, 2026. We want to give ourselves some time. It's just a few weeks away. We're sitting at $156, but we see it coming to 74. So what I'm going to do, I'm going to go to the $74 call put, excuse me. I'll go to the put. It's $159. So I want to say I want 20 of those. So 20 of those gives me time, and it gives me a starter position because I would like to have 60. So I'll be doing 3 orders of 20. So my first order is going to be $3,000. Is everybody clear on that? Everybody's clear? Okay, nobody said anything. So now this shows me, once I have done that order, this shows me what I can make. So once we start moving the little line over, it shows me what my profit could be up here. So if, and this screen is not cooperating, but 74 is like right here. So 74 would be like $9,000, something like that on 20 contracts. But what I do is I normally average in my contracts. So once I'm in a position, if we're dropping probably at 90, I'm going to add 10 more or 20 more. Then right about 80, I'm probably going to add 20 more. So now I'm at full position. When I get the full position and we're still dropping, I'd really like to be at full position sooner. But As we're getting closer, I'm going to start averaging out. As I start getting closer to my number, the contracts are going to get more juiced up. They're going to get more volatility on that IV. And then I would be looking to exit, most of my position before, let's see, 60 contracts. And a trick you could use too, if you're in profit, you could take some of that profit and then buy more contracts. You don't have to sit. So that's a 9,000, 9,500 position. So with 60 contracts, and we know that this is coming down on the monthly chart, by the time we get to 74, you're at about $31,000, $35,000 on Netflix. So now there's your money to buy Netflix. Think about that. You say, well, man, I don't have no money to buy Netflix. You might say, well, I can't do 60. Well, do two. Two contracts will cost you $300. You take those contracts down, you just turn it, what was that? $300 into $1,200, somewhere in that area, $1,300. Now take that $1,300 and buy some Netflix. Because think about it, at $1,300 now, $1,200, and it's at 75, 1,200 divided by 74, whatever that is, boom, you got 16 shares. So did everybody see how I did that and what you kind of understanding what I'm saying? You can do the option, take the money from the option, and then use that money to buy your shares. So you're not even using your full position or all of your capital. You're literally just using a few of the shares to get in on an options trade, to leverage it, to allow you to be able to buy more of the stock that you want. Now, when that thing zeroes out at our level, 74, there you go. Now, imagine you do the investment with $10,000. You just turn 10,000 into $30,000. You divide that by 74. You've got 405 shares now. Anybody have any questions about that? Because I want to make sure you're getting it. This is how you use leverage to get what you need to get in the market. It's not about having a whole lot of money, but you can use the money that you do have at whatever level you're at to leverage that and get what you want to get. So I will definitely be setting some orders in the morning, and they'll just be sitting there in the queue. And then whenever it hits there, boom, I'm in. If it's not January, whenever, March, whenever it gets there, I will be in that play. Let's look at where we at, 6:30. So we got 30 minutes. I want to talk about one more thing that I want us to pay attention to, and then I want to take some questions. And I also want to ask Josh some questions if he doesn't mind, because I got Josh here. Whoa, look at Bitcoin. So this is the other thing that I wanted to cover. I looked at Bitcoin earlier. I set up some levels on Bitcoin because y'all, we could literally just be retiring off of this in just a few weeks. So let me zoom back out on Bitcoin on the daily. In fact, let's do the monthly. And
yeah, I can't, Anthony, can't see Bitcoin.
Okay, let me switch the screen back. Thank you, sir. Thank you. Let me switch. Whoever that was, thank you. Bitcoin. So really, guys, with the way that the market is going to pull back in the next few days, next few months, we can short these things with comfort. I mean, I don't even think that you need to even be stressed about whether I should short this stuff or not. I mean, honestly, we could do some SPY put leaps where you go out a little bit longer and you just sit in them, because this is what I want to show you on the monthly. Can everybody see Bitcoin? We topped out on Bitcoin at, nobody said anything, but I think y'all can. We topped out at 126.50, $126,650. That's where we topped out at on Bitcoin. And when we topped out there, look at this. It's not a perfect triple top, but we were in the area, 124, 123. We couldn't maintain it up there. And so what did we do? We sold off. This was August, September, October, and then November started the big push down. And look at where we are now. We started out December and we're wicking from 94 and we're heading straight down. So now let me go into the daily, and I want to show you this channel that we're in. We're in a channel, and we're just up, hit the bottom of the channel, top of the channel, down, up, down, down. We're going to break out of this channel. And when we break out of this channel, this next time, I expect us to hit what I call the key level, which would be that 73, 74,000 level on Bitcoin. Now, the first level that we need to break this week would be where we bottomed at today. We got two nice moves down today, and we're bouncing now. Today, no, this is Friday. We bottomed at, what was that, 88,000, let's call it. And then Saturday went up as high as 90. And then today we went all the way back up to 91. And then we just pushed down right here to this support level. I just put a line there, 87,735. I want to see us and see, look, this wick here is lower than this wick. So we got a lower low from where we were on Friday. So now I'm just looking for the retest of this low right here at 87,783, which will bring us back to 86,266. We break there and we will come straight back to these lows over here of 80,000. There's nothing to stop it. The next time we break this, I think we're going to get a nice free fall. And this is setting us up, I think, for a drop, a possible nice drop with the Fed meeting. So keep your eye out. This channel that we're in, that we've been trading in, look at it. It's just been a lower low, lower, lower. Now we've been kind of going sideways. If you look at this, it's kind of a sideways up and down. And then we're going to get one of these moves right here. And last time we got this move, that took us from 105 all the way down to 84,000, like a $20,000 move. So think about that. From where we are now, we're probably going to lose another 25, 35,000 off of, where are we? We're sitting currently at 89. So let's call it 90,000. And I'm going to say minus 36,500. So yeah, 53,500 is where I would say 50. Oh, good Lord. This week, possibly. If we sell off with the Fed, I think we're going to lose all of these supports, including our key support. I think this is going to roll over, and it's going to see how it's making an M. We don't have the other side of the M. So I think we've been up, we've been down, we've been up. I think we're going to come back, retest this 80 and continue down. So don't be surprised if you see Bitcoin this week way below this key support area. Don't even be surprised, because we're talking about it right now. And if we sell off on that Fed meeting, just be ready. You know, get your IBIT. I mean, we'll probably come down, up a little bit, and then straight down. We'll hit this key support, maybe bounce off of it a little bit, and then we're going straight down. And when we get below 74,000, people are going to freak out. Watch the news, watch the media. They're literally going to be freaking out when we clear this level and get down into, what was it, 53? I'm thinking right about 53.5, right in this level. And that's literally my second line. I didn't even know I had that down there. 49, yeah, 49.4. So why 49.4? Look, we wicked off of that back on August 24th. So if 52.39, yeah, I already charted this. So 53 brings us back to September the 24th. So they're about to drop us back to 2 years from where we were 2 years ago. Once we lose this week, this is with the sell-off with the Fed meeting. We get a sell-off with the Fed meeting, and the whole market is going to pull back really, really nicely. And this could be what starts the recession, because all the indicators all over are saying recession. And so we want to look this way. I definitely don't think we need to look back in the up position at all. I would want to be thinking down on this. And then NASDAQ is going to follow. So let's look at IBIT real quick. The way that IBIT has been setting up, the bottom of 46, I'd like to see that retested. Let me see, where are my EMAs? Yep, the daily, we're below everything. I didn't even realize that. We're below the daily on the 200. That was $58. Good Lord. Oh man. Okay, this low was November the 21st. I need a calendar. November the 21st, we bottomed. We came back up. We came back down, tried to retest it, but found support at 47.59. We came back up. We got a double top. And notice this, y'all. Everything is hitting that 20, and it can't get above the 20 anymore. If we can't get above the 20 on the daily, we're not in good shape for to go to the upside. We got a double, almost a triple top, trying to go back and retest the 20. Now we're in the down position. And if we get a sell off this week with the Fed cutting rates, because the last time he cut rates, the market came down. So it could be seen as bullish or bearish, but I think it'll be bearish because at Christmas time, it's normally low volume. We normally get a rally, but with the circumstances of the economy, people being laid off, and a bunch of really a lot of the buying has just been bots. So let's keep that in mind too. So I would love to see us pull back, retest this area, that 49.31. We lose the top of this candle here, and we're coming straight to 46.82. We lose 46.82, and that brings us back to the April lows. 43. So if we get a big sell-off this week or going into January, I would look to see IBIT resting right around 43, somewhere in that area, 43, 42.99, that area. So these are nice levels now to take some puts and go out. I mean, a month, 2 months, 3 months, and you could just sit on them. You can build a large position and benefit from the market falling. The next one we want to look at, gold, GLD. I'm sitting in gold calls, the 400, because if the market starts to fall apart this coming week, gold is going to go up. So if we look at gold on the monthly, look at that. Look at the big picture. Sometimes you have to zoom out. Sometimes you just need to zoom out. I mean, nothing about that tells me I should not be in gold. And sometimes we just don't give ourselves long enough to make the money. We got up to 4283 and we wicked. They said, nope, too quick, too soon. Boom, they brought us back down to 368.17. We went back up, all the way back up to, what was that? 388.29. And now we're here in December. We were all the way up to 392.02, and we went all the way down to 383.01. I think the next move on gold is a move back up to about 399, because if the market starts to crash out, people are definitely going to move over and jump over into gold. So keep an eye on gold, and let's take a look at that real quick, because that's a very important trade. I want to see in Thinkorswim, if I did a trade on gold, what would that look like? And this is how I do my trades. I go to Thinkorswim. If I'm gonna do a large trade, I do them in Thinkorswim or Fidelity. And so I go there, and then I'm gonna go right back where I was into gold. And then let me see, Thinkorswim. Where's Thinkorswim? Which screen is that on? Here we go. So you guys can see Thinkorswim, right? I got the right thing up. So what I want to do, I want to go to GLD. Now what I want to do, I'm looking at the volume. The volume has been about 9 million. But I also want to look at the options. And so I'm looking at the 400 call, because I want to be in the money quickly. So I'm looking at the 400 call, and I want to go to January 16th, possibly further, but at least January the 16th. Those contracts are now $540 each. $540 each. The volume, let me see, open interest. Can I see any of that on here? Option status. Here we go. Puts. I'm not used to seeing this on Thinkorswim. I normally open this up on trying to see the open interest. Anyway, when I'm building a trade, I normally set these up on Webull, and it shows it to me a little bit clearer there. And then I'll come over to Thinkorswim and I'll set it up. So if I wanted to do, say, $1,000, that would limit me to 2 contracts. But what I'm doing is I'm going out to January, and I want to see us break the 400 level, which is right about here. And it seems like I need more, because I mean, I would only make on that $1,700, and you want to make a little bit more than that, I would think. Let me see. I would need to buy more. So that's the other thing too. When you're doing your trades, kind of figure out what you want to make, and then from there it tells you, which plays you can buy. Because right about here it's 400, and then that tells you, what you can buy. Because I'm looking at the return, and you don't want to just jump into something. I would say always do this, if you can figure out. And normally this screen, it looks different on here. On my other computer, it's bigger. I can see the whole layout. So I must not be doing something right on this screen. It's telling me to make it bigger, but then it's still not filling the screen properly. So right there, I wanted you to see it down here. But anyway, with 2 contracts, I could probably make like another 2 grand or so. And that's not bad. And it just depends on what your budget is on these positions. And so I would definitely be looking at gold. The other thing is too, if we know that the market is going to drop, or we're thinking that the market is going to drop, if that's our thesis, then we can go out further. You could say, well, shoot, I got a large enough account. Let me go to June. Let me go to June. That gives me 193 days, and I'm going to look at, now the call is $1,900. So when you buy the call at $1,900, when we get out there, you get a better return. So the larger contracts pay you more. Let me pull it up on this other screen, because I want to be able to tell you the numbers accurately, and I can't really see them on that screen. So give me 1 second. Now I want to take some questions and make sure that you guys got what I'm saying. This other screen is much bigger using this laptop. I'm going to upgrade my other computer this week. Okay. So when I pull it up over here, I'll be able to see a lot better, and I'll be able to see all the numbers, because the leaps is the way really to do it. And if you have the money, that's the way to do it. And you can go to work, do whatever you need to do, and you don't have to worry about it. You can sit in those gold calls. So here we go. I'm on the big screen. GLD. Okay. Options. I'm going to do June. June. Here we go, June 18th. June 18th. And let's say the June 18th, the 400. Hopefully everybody's following me. Those are 19. So let's say you did 10 of those, and you want to do one big trade for the next 6 months. And then after that, you do another big trade. So that would be your whole budget. Say you want to trade 10 grand. So that would put us at about 5 contracts, because it's a leap. Well, it's a swing. It's not a leap. It's not a year. But that would be $9,800. So now I can see the whole thing on this computer. When you get to 400, and we're going to break 400, you'd be already up $4,421. Gold gets up around 424, 450. In an all-out crash, you'd be up $23,000 on that investment. So you would spend $9,800. We get up into that 950 range midways the year. Nice move the way gold has been running, and you're now up $22,000. And so that's kind of the way I think that we can look at the market if you have the money or if you just want to paper trade it. So that's another thing. So if you're looking at paper trading, you can do that too, just to get the experience. So now as things begin to fall apart and things begin to happen, you've at least paper traded it and paper traded it and paper traded it, and you know how to use the account. So when you do get the cash, you're ready to go. Does everybody follow me on that? So it's not so much of always having to use your money right away. If you don't know how to do this, paper trade, paper trade, paper trade, practice your entries, your exits, whatever you're interested in, paper trade it. I paper trade a lot because a lot of stuff I want is it's bigger than my budget. And so like I'll go to, let me show you. Let's go back to gold. GLD, and then we're about to be done. I'm going to take some questions though. Okay, so let me see gold. So let's do one more. So Bitcoin's getting a bounce. QQQ, NVIDIA. NVIDIA has been one that everybody has traded. Everybody knows about NVIDIA. Our lows back in April, I'm on the monthly, were $85. And now we're getting a bearish, we had a bearish engulfing candle coming out of November. Well, what's a bearish engulfing candle and what does that mean? The red candle was bigger than the green candle in the previous month. We had more selling coming out of November than we had over in October. Look at this huge red candle. That's very, very bearish for NVIDIA coming out of those levels. And so when we see that, someone's texting me. I'm gonna have to look at it in a second. Now we get over to December and look at December. Our highs have only gone to 185.94, and we're down here at almost a quarter of this candle. 50% would be over here at 192.79. We're gonna be back in the 190 cents. And so the logical move down for this would be down to test the 50 on not the daily, but it would be the weekly. Let me move to the weekly, because on the monthly, that would be a big move down. And I think, yep, so we are currently testing the 20-day moving average on the weekly. We got below it. We got down to 173.51. NVIDIA signed a couple of deals this week, and they're also operating in a channel. They signed a couple of deals, but look, we still haven't broken that 186 level where we had this sell down in this wick. So we came back up to retest it. Buyers were not there, and it came down. So the first level I'd like to see on NVIDIA broken so that we know that this push up is real, which I don't think it is, would be, just bring this red line down right here, 186. If we don't break 186 and hold above it, fill this area right here next and clear 190 on this week, going into the new year. I just like to see that happen. If that doesn't happen, we're going to roll over and we're going to come back down and retest 150. What is this? 157.31. And this is on the weekly time frame. This is a large time frame because we were already here below the 20 and they said not time yet. They brought us right back, and look how this candle on November the 24th, it's literally resting like you sit on a chair, sat on the 20, and then we got the candle down, they came up. Because remember, red candles go down, green candles go up. So they took us down, up, we get some support, back down under it. They tried to retest it. We couldn't get there. We only got like what? A quarter of that wick and then straight back up. So they were saying, not yet, not yet. Let's wait on the Fed. Let's wait on the Fed. Y'all trying to drop it too quick. So now if we get bad news this week keep your eye on NVIDIA, because NVIDIA has been leading the way. Quite as it's kept to the downside. They tried to rally it, and let me see my hollow candles. They tried to rally it, and that's a big hollow green candle saying we want to go up. When you see those big hollow green candles, it means market wants to go up. Look what happened last time. Hollow going up. These big hollow candles, like a balloon. It wants to go up, but will it? That's the jury's still out on that. And so we shall see. If not, we're going to hit the top of this and we're going to come back down. We break this support and we're coming out of 164 all the way down to test the 100 or the 50, excuse me, the red. 157 and some change. So if we get a really bad report from the Fed, or the Fed is kind of hawkish this week, be ready for a reversal, a huge reversal in the market. I mean, like a huge reversal. 186, we're sitting at 180. No, where are we sitting? Are we? I can't even see where we are. 182. So let me see, 182. So we could get a $26 drop. Anybody like $26 drops on NVIDIA right before Christmas? It's setting up for that type of move. If we sell off this week, we could get a nice green, red, green, red, red, green. The next candle is red. So I hope y'all ready for this. And look, when I go into the daily, look, we're already hitting the top of the trend line. We're already hitting the top of the trend line in that channel. See what I'm saying? So when you put your trend lines on, clean double top. I mean, a baby could chart this. Clean double top. And I'm just a regular guy showing what I've done, what I do. If I see this, I'm doing puts. We come down here, I see this, I'm doing calls. I see this double top, I'm doing puts. Here, I don't know. This probably would have confused me a little bit, but we came back up. And then if I didn't have my trend lines on, but if I saw this and we tapped this trend line, I would know we're coming down. Reversal candle, double top, coming down. Double top, coming down. Now, doji, indecision. We're back at the top of the trend line. And look, we're just playing right below the 20 with 2 wicks. I think we're going to roll over and come right back down. My prediction this week, if we sell off, if we don't sell off, and the Fed is very dovish, and he says, "Hey, I'm going to cut," and then we still don't know what the market's going to do. He could be very dovish, and it could go up, and it could do something like this. He could be very dovish, and it could shoot all the way up to the top of this candle right here, and then come straight back down. We get a false breakout and we come right back down to these lows and continue going. So be aware of the fake out breakout, because that will liquidate you. It will liquidate you quickly. So if you see the market running, just keep watching for the double tops. So if we clear, let's say we clear this area where this big candle was, and let's say the market just runs on Wednesday, things are looking good, hallelujah, everybody's happy, and we get up to 196, and then my next level to break, I would want to see us above 199.07. Let me tell you something, boy, everybody on this class, if this thing gets up this week to 197 or somewhere, anywhere in this gap, you better short the crap out of it, because it's not going to hold. If it does hold, I mean, you don't have to go all in on your short, but let's say you caught it right here, because remember, the Fed meeting is going to be at 1400. So you can be sitting with your finger on the trigger, and that's normally how I am. Literally, when the Fed meeting comes out, let me show y'all how, let me go back and we are done. Let me show you this, and we are done. When the Fed meeting comes out, this is how my hand looks on my trading software. At 159, I'm sitting on the software Let me see if I can show you. So if I'm getting ready to buy something, like say that's NVIDIA, NVDA, and I'm thinking that the market is going to go down, you got to be ready to go. So what I'm normally doing is, let me see, where's my options? This account is set up a little bit differently than the other one that I use. NVDA account. There's no positions. Where's the NV? Here we go. So with the options, so if I think that it's going to go down, I'm literally sitting in the puts. So like if I'm thinking it's going to like Thursday, if we're in the 180s, I'll just be sitting in 170, literally 170, and I'll have like 10, 20 loaded, and I've already done my review. And y'all see this? My finger is on send. I'm looking at the button countdown coming up to 2 o'clock. And if we get a big red candle down, boom, I hit send and I send it as quick as I can. Then as soon as I send that and it's up in profit, I come back to the software again for the second time. I come back. Now I go to, I don't have positions in here, but I go to sell, what I was showing y'all earlier. I go to sell and I go to right here and I put my trailing stop loss on. So when you go to sell, I go quickly, put my trailing stop loss on, and I normally keep my trailing stop loss at 3% because I'm not trying to give no money back. So once I'm up and I could say, let's say that thing starts dropping at 186 or 180, wherever it's at, and it's at 170. 169, and it's just dropping. Once I'm up a few $1,000s, I just hit review and I put a 3% trailing stop loss on it. And somebody might say, well, why you put it so tight? Why would I give money back? Why would I give money back? I'm not in the habit of giving money back. I set that stop loss tight. Now you can, because we know there's going to be a bounce, you can set your trailing stop loss. And this is why I think everybody needs to have a Thinkorswim or a Fidelity or Moo or something that you learn how to use. You can set your stop loss at say 9%, 10%, but you want to make sure you calculate it. What's that going to cost you in losses? Because we're not here to give money back. We're here to keep money. But you're saying, but when it bounces and my stop loss is looser, I'm going to get the rest of the ride down. Man, I can, as soon as I hit buy and get my money, I can open up more contracts. Now I jump out to. So now let's say I got out that quick. Well, you got to, and that's why I say you want to paper trade as often as possible because, man, that sounds like a tornado. So now I come back. What is that? It sounds like a tornado out there. So now I come back and I jump from the 170s. You got to be quick down to the 160s, and I'm still in puts. And I'm jumping in and out quick. You can have your preferred number that you like them to be on, and it just sits there. So every time you jump in, you review, boom, send. Now you come back. It's falling. What I'm doing is I'll let it fall for like a couple of minutes. I go to sell, boom, I'm down to my trailing stop loss. And then I come back. I'm not doing no 10%, 3%. And look how quick I did that. It hadn't even been 10 seconds. Send. I get kicked out. I do it all over again. I'm securing the bag as we're falling. Now, what the other strategy can be is now the market's falling, it's falling. You go to your puts, you were in the 670s or the 170, the 160. You can say, well, shoot, I'm just going to jump out to the 100. And instead of being in this week, I'm going to jump out and I'm going to go to January 16th because the market's falling apart and I don't want to keep getting in, getting out. Okay, January 16th, the 100s are 10 cents. Now give me 300 of those. So now you go and you say, well, I'm going to be able to sit in those. So 300 of those will cost you $3,000. Boom. You buy, you send. Now you're in the trade. The market's still falling because we're expecting a big fall, $26. So you get another $3 or $4. So now you say, man, this thing fell another $3. It might be an hour or so. You come back and sell. But remember, now this time you bought 100. So you come back now and you just say, hey, sell 75. And then you put your trailing stop loss on. And then you set it to 3%. This time I might say 5. And then review, send. Now I still got 25 in the market till the end of January. Market keeps falling, market keeps falling. By the end of January, by the time that contract is due, those might be up another $3, $4, $5,000. Just probably more than that, 25 contracts. So let me see. And we're at 7 o'clock. I gotta stop. But that's how I set up the positions. That's how I do my stop loss. Do anybody have any questions? I definitely want to take some questions because I know somebody's got a question about that. I think it was Leroy had asked me about that, and somebody else had asked me about the limit orders and the stop loss. Did that help with that, Leroy? And it was someone else that texted me.
Hey, Anthony, it did. Thanks.
Okay. And then Josh has to go. I'll get with you later. But anybody else that has any more questions about Netflix, if you're interested and you just watch this again, watch it over and over if you have any other questions. But I'm not looking to get in until at least $82 and $74. And then I'm just going to be kind of light in the market until after the Fed meeting. Because right now, I mean, I just want to see, is he going to cut? And then, what's that going to look like? And then from there, kind of reposition and other than long-term things, reposition and just kind of keep my eye on the market. And let's see, SPX, we said it possibly, let me see, I'll show you guys that one more time and see, did it hit the level that we were charting or hoping for? So SPX, we were looking at it earlier. I was thinking, look, $1 off. Boom, just hit my level. How about that? I said 68.66 by the time we finished the class. Who was here at the beginning when I said that? That hit our level to the T, and it's wicking. And so, guys, we're starting to mastermind in the new year. It's only going to be for 3 months. It's only $325, but we're going to be going over how to chart and know where the market is going. Because if you know where the market is going, it's a very powerful tool. And listen, it's from the patterns to profitability. And so you definitely want to take advantage of that. That's only like $100 a month. And I'm going to have Brandon coming in to do leaps. And we're going to go a lot deeper into leaps. We're also going to do covered calls, stock market psychology. Paul Jervy, I think it's going to be coming back. I'm also going to have an attorney come in to talk about your taxes as you're making money. Because if we catch this fall on the market the way that we're hoping to catch here in just a few weeks, few months, or whenever it happens, you're going to have a lot of money that you've got to pay taxes on. I promise you, you're going to have a lot of money because, listen, you don't need a lot of contracts in the market. It's the drop that pays you or the jump up. But from the way we're looking now on the market, it's going to be the drop that pays us. And so it's looking like we're going back to like 6,000 overall on the SPY. The way that things are kind of shaping up with this double top that's forming. We topped out at 69, and then look, we got a lower low, and it's going to roll over, and it's going to come right back down. And this is kind of where we are, and everybody is waiting to see what's going to happen, but it's going to come right on back down. And so definitely take advantage of the mastermind. It'll probably end up being like 2 nights a week, but everything will be recorded, everything. So even if you have to work or something like that and you can't make every session, I can basically send it to your email or give you a link to our Google account where we're going to have everything at, and you can just log in, and then you can share that with your family. Say you got a son or a daughter or a wife. The whole family can, over that 3 months, that's life-changing to learn this because so many people are getting laid off, and people, need extra money. People are getting severance packages and retirements, and they're not sure what to do. But this is a way that you can make your money last forever by simply investing, using some leaps and different strategies. And we're going to show you exactly how to do that. So we're probably, I think I counted it up, total is 23 sessions. And so let me see, 23.
Hey, Anthony, this is Gunn.
Yes.
A question for you. My wife asked, is this for beginners? Because we have two people we just added to the group and they are fairly new, don't know anything about it. Is this a class that they should get in?
Oh, yeah, yeah, definitely. So what we're going to be doing in these 2 nights, first, we're going to be going up. So it's going to cover more than stocks. If you go and click that link, we're also going to be covering life insurance. We're going to be covering the legalities of trading. How do you write off your trading? But there's going to be very, very in-depth charting sessions that I just have not had the time to do. And I'm going to be reiterating those. They'll also be recorded. And so I'm trying to set up another channel where all of that will be recorded and you'll have access to that forever after this session is over. So like say, even if it wasn't in the session, I'm going to be recording probably starting this week. I'm going to be recording all types of charting and things leading up to January. So there'll be a lot of information that'll already be pre-recorded. So for beginners, it's actually perfect because you can come in like with your sons, your daughters, your niece, nephew, uncle, whoever, and you basically get a crash course in 3 months. In 3 months, and you can literally be trading after that. I wouldn't say trade anything before that. If you're a brand new trader, a novice trader, take the information that we're sharing. And then we also want them to do a review with Paul Jervey. He's a certified licensed provider, financial provider, and I brought him on because he's legal. So if you, I just give advice in financial education, but he's actually licensed and he can look at your financial situation, say, do this, 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 and this. And then, so it's definitely for beginners. It's for all levels. And the lady that taught me to trade, Chrissy, I'm going to have her come in. She's going to do a class on the SPX. So I'll be reaching out to her this week, but man, we might just, even if you're not in the mastermind, there might just be like a $25 or $30 or something that night, but you do not want to miss charting with Chrissy. I've seen her do, just one day, $30,000 on 4 SPX contracts. And with the way that the market's going to fall apart, you can't afford to be a part of this. $300 is the least of my worries. That's why I made it cheap, because literally I'm just using the money to pay the people that are going to come speak. And so I definitely want to compensate them for their time. And then I want to have breakout rooms too. So if you have a question, it might be about futures. I want to have a breakout room, and there will be what we call office hours. So say we start at 7 p.m. on Tuesdays and Sundays. 30 minutes prior, we have office hours. You can come in 30 minutes prior, ask any questions, any trades, anything you want charted. And then 30 minutes after, if anybody needs it, we're still available to help you. And so that's very valuable, because if you're looking at anything with futures, charting, investing, we could chart it and say, well, man, I would get in here, I would get out here. So definitely for beginners, definitely for anybody that's looking to grow their financial net worth in the new year. So check out the link. If you have any questions, just give me a call. I can do a one-on-one with you and, and just talk you through everything that's going to be going on. But basically, it's about 23 sessions that we're going to do in 3 months. And it's going to be really, really nice. I'm excited about it. Yeah, I'm excited about it. So yeah, that's like $14 a session if you divide it by 325. So it's going to be really, really nice. Yeah.
That's a McDonald's meal.
Say again?
I said that's a McDonald's meal.
Yeah. Oh man, me and my wife went out to eat the other day, bro. I'm not eating out no more. I got crab legs. What did I get? Crab legs. I got oysters and a lemonade. My wife got a pot pie, and a glass of water. $165. I told him, I said, no, it can't be. Y'all got the wrong table. That's our table. That's our, I'm like, are you serious? They was like, oh yeah, the crab. Oh yeah, it was the oysters. They said the oysters were market price. I said, well, next time let me know what the market price is, because I'm not thinking, what's the market price? Or like the oysters is like $80. I'm like, are you out of your freaking mind? You charge me $80 for? Are you serious? I'm like, yeah, I'm gonna have to start. When they say market price, I wasn't thinking like that, but you know, it's crazy out here, man. So, but it's all good. Anybody that wants to be a part, you know, we will work with you. I really just want people to get the information and be ready for what's coming. There's a lot coming down the pipe this next year. And then also, yeah, we're going to have Jamila Moore. She's the attorney. Paul Jervy, Brandon, and Chrissy will be probably our 4 speakers that will be coming during that time. And I'm working on some other speakers possibly also. But that's it, guys. All right, Leroy, y'all take care. Everybody have a good one. We'll see you on Tuesday night, and then in the morning I'll be checking the market out, and we'll drop in some more information on what's going on in the morning. But y'all have a good evening. Take care.
All right, thanks. Have a good one.
All right.
Thanks, Anthony. Appreciate it, man.
Thank you, Anthony.
You're welcome. Y'all take care.